Hi guys, this is Erica from Gokce Capital.
Now before I begin, be sure to subscribe to our YouTube channel and turn on notifications. In 2016, a local news article on one of the candidates for Commissioner of Teton County, Idaho, pulled out an old skeleton in the closet. This particular skeleton was not an affair, tax evasion, or corruption, but a failed real estate development called Canyon Creek. In 2007, the candidate in question had been one of the partners in the development company that planned, entitled, and subdivided the 350-unit Canyon Creek subdivision. This subdivision, originally planned to take advantage of the booming Western real estate market, abruptly collapsed along with the economy just a year later. No infrastructure was developed, no lots were sold, and the candidate went from a millionaire to bankrupt. But Canyon Creek is not alone. In Teton County, it is estimated that 68% of the lots in recent subdivisions are undeveloped. So what happened? I'll let you know at the end of this video, but if you are wondering how you can avoid falling into a similar situation with your development, looking at your market's absorption rate would be a good starting point. And in today's video, we have the top things you need to know about this metric. Number 1. The absorption rate is used to determine the rate at which available properties are sold in a particular area over a set period of time. Number 2. To calculate the absorption rate, take the total number of sold properties in the market and divide it by the total number of available properties for sale. Let's look at an example. Say there are 30 active listings in your market, and over the upcoming month, 10 of those properties are sold. To get the absorption rate, you simply divide 10 by 30 to get a rate of 33%. You can also flip this calculation and divide the total number of active listings by the properties sold to get the average number of months to sell a property. So in this case, 30 divided by 10 would be 3 months on average to sell in this market. Number 3. Buyers and sellers can use the absorption rate to determine who the market favors. For example, a seller's market generally has an absorption rate above 20%. Meaning that a good chunk of all listed properties will sell in any given month. Or to flip the calculation, a seller's market is a market where it generally takes 0 to 5 months to sell a property. Alternatively, a buyer's market has an absorption rate below 15% and is a market where it usually takes over 6 months to sell a property. So using the absorption rate to know the kind of market you're in helps you determine how aggressive you can be in negotiations. For example, if you are buying property in a seller's market, you know you won't have much wiggle room on the price. However, if you are buying property in a buyer's market, you may be able to be more aggressive in trying to negotiate down the asking price. And number 4, developers also use the absorption rate to determine how many homes or lots they can expect to sell in a year. This kind of calculation can help verify whether a development project is going to be successful. For example, if you have a 300-lot subdivision, but the absorption rate indicates that you may only be able to sell 2 lots every month, then it's going to take you over 12 years to sell your entire stock, meaning that it is very unlikely your project is going to be successful or profitable. But let's return to Teton County. This rural county experienced a huge boom in the years prior to the Great Recession, spurred primarily by aggressive local land use policies and a proliferation of real estate speculators. Yet today, Canyon Creek represents one of the few relative success stories from the county's new replatting strategy aimed at solving the zombie subdivision problem. In 2013, Canyon Creek was replatted, reducing the scale of the subdivision from 350 lots to just 21. The replat reduced the infrastructure price tag for the developer and placed the bulk of the original 2,700 acres into a conservation reserve program aimed at preserving critical habitat. Now, it would be unfair to say that simply calculating the project absorption rate in advance would have prevented Canyon Creek from occurring in the first place. After all, no single analysis can predict a large market collapse, but it is the first step in the larger process of taking a thoughtful, conservative approach to a development project. Now, do you have a development vision? Let us know about it in the comments. Did you like this video? You're going to love our Gokce Land Due Diligence program. We'll make you a land due diligence expert in just 7 days. Check it out at gokcecapital.com/glad. And while you're at our website, don't forget to explore our $1 down properties at gokcecapital.com/listings. Finally, don't hesitate to reach out with any questions. You can email, call, or text, and we will respond as soon as possible. So thank you for listening, and more to come.